Hi traders, thanks for stopping by thetradinganalyst.com. We're going to take a look at the S&P 500 daily chart here, and I'm going to go over some levels here and my thought process, and hopefully you come away from this video with some extra knowledge on technical analysis as well as some profitable trade ideas here in the market. But first, if you're not already a member, go ahead and visit us on the home page and get to know us a little bit better. www.thetradinganalyst.com. Once you sign up, you're going to be able to take part in the professional chat room, the daily watch list, the real-time profitable trade alerts, which not only given in the live chat room, but also via text message and email for those of you that have full-time jobs, part-time jobs, or maybe you just can't be in front of the computer screen all day long. You're still going to be able to get those profitable trade alerts. You're also going to get the exclusive member videos, the webinars, and an education from mentors like myself who truly care about your success in the market. It's a great opportunity, and we'd love to have you. All right, so let's get into this market right here. We have a few levels here that I want to go over here. So let's go back to the trend line break that we have here from the February lows. We have a touch here, we have a touch here, and you can see that we grind it up against it right here. So I've seen a lot of different versions of this trend line being posted on social media, on YouTube, or what have you. In my opinion, this is the best trend line to draw here because we've got these two touches back here, 1, 2, and then you've got several candles that touched it over here. So we've got a lot of touches against this trend line versus others where they're drawn at different angles and you only have the one touch and that two touches over here and then maybe one other touch right here. So this, in my opinion, is the best trend line. It's the one that I have drawn. Another one here, we have this downtrend line right here, started in early September, have many rejections against this trend line right here. You can see we are making lower highs right here, but what we haven't done is really made a lower low when you compare it to these lows and these lows right here. So we'll see what they do with this, but to me it looks like a very clean pattern here that's leading into the breakdown. Okay, so bears, you want to see this 2120 level break, and by break I mean a close below it. Okay, so obviously we broke below it here, but we ended up closing back above here. So we want to see a close below this level. A close below that level is going to send the market lower here. We got a bounce here on Friday's session. We tested that level, and you can see that we closed near the lows of the week. So here's where the highs of the week were, and then you can see here the lows of the week were on Friday. Were made on Friday, and we closed near those lows here. So we'll look at the weekly candle that we formed right here, and you can see that's a bearish engulfing candle right here. And you can see another thing I want to mention here is that the weekly MACD has been heading downward here this entire time. Okay, so moving averages, price, everything is pointing down here. And if you look at market breadth, there's a number of different ways to look at market breadth. A lot of those indicators are showing, not indicators, but those charts and oscillators are showing that many of the stocks are below their 200-day moving average. In fact, there are only 60% of the market, of the S&P 500, excuse me, only 60% of the stocks in the S&P 500 are above their 200-day moving average. Okay, and that's just a general guideline of, you know, how healthy is the market. And if we only have 60% of the stocks above their 200-day moving average, and the market is 2% from all-time highs, that's not exactly what you want to see. You know, you want to see 80% or more that are above, at least above their 200-day moving average, okay? So that's kind of a good barometer to look at. It's healthy to, it's a good idea to not only just look at the S&P 500, but to look at the general market as well. We've got a lot of, we've got several individual names that were and are still holding up the market. We've got Amazon, and obviously that dipped on Friday, so that's one down. We've got Apple that reacted negatively to earnings, so that's one down. We've got Google. Google is still maintaining its gains and it's near all-time highs, so that's positive for the market. Microsoft, another one that's near its all-time highs as well, so that's positive. But you have Apple and Amazon, which were doing very well, and the reason I'm bringing up these few individual names is because they are very heavily weighted on the market. So most stocks, like I said, are below, well, not most, but many of the stocks in the S&P 500 are below their 200-day moving average. So the market is very vulnerable here, and if we break down below this 2120, that's the level that you want to look for a break on here, technically speaking. The next level below that is going to be this 2010 mark. Below that, that's going to be a little support there. I believe that if this 2120 level breaks, that we're definitely going to break this 2010 level here. So look for a close below that 2120. That's the key level you want to focus on. And bulls, if you're looking for upside in the market, you want to see this 2151 mark break. Okay, 2151, 2152. If that level breaks, we'll be over the downtrend line and we'll be over these highs as well. So I still think there's a lot of resistance up here at 2190, but you can at least play it from here to here. So from 2151 all the way up to 2190 or so between there. I think if we break 2151, we're definitely going to retest these highs up here near 2190. So just kind of be aware of these two levels here. We're just trading in a little box here. More than likely going to continue here into next week. I believe the following week is going to really be the deciding factor, especially since we have earnings coming up here. So basically, in short, pay attention to 2151 and 2120. Other than that, the rest is just noise. Thank you for stopping by. Appreciate it as always. Again, visit us on the homepage. Get to know us a little bit better. If you like the free videos and the free analysis we give to you on a daily basis, it's nothing compared to the membership at thetradinganalyst.com. And the best part is, once you sign up, you're going to be able to get real-time access to those profitable trade alerts that we give to our members on a daily basis. It's a great opportunity. We'd love to have you.